Hello, everyone, and welcome back. Today, we're going to be discussing the RSI, which is a relative strength index. We're going to be trying to explain everything about this oscillator, how it works, and how to identify buy and sell signals using this oscillator. So, it was used roughly since the late 70s, so it's one of the more established oscillators out there. So, let's check out the formula for it. So, it's usually calculated by 100 minus 100 divided by 1 minus RS. So what is RS? RS is relative strength, and it's calculated by the average of X. X is is the price market. Days up divided by the average of days down. So let's keep it simple. Let's say we're using a 10-day moving average, okay? So we look at these last 10 days and we see how many days did the price actually closed up, and we combine all of them together and we divide them by 10, and that's how we calculate the average days up. The same for the average days down, but we look at the price we look at the time, the days when the price actually closed down. The value of that would always be between 0 and 100%, and that's why the RSI is considered a bounded oscillator, because its value is always going to be stuck between 2 points, and in this case always going to be stuck between 0% and 100%. So today, let's use this oscillator in a real example, and I'm going to show you how to add this oscillator to your chart on using trading views. So let's delete all of this, go back to the normal template. Here we go. This is a daily chart for the Euro USD. Okay, so first we go into the indicators here and we type RSI, and you see it on top, relative strength index. We add it, and here's the oscillator. So the oscillator has two major zones. Remember that. Everything above 70% is considered overbought, and everything below 30% is considered oversold. What does that mean? It means when the market reaches overbought, for example, zone, it do a bounce back down, and the other way around. So when it reaches oversold, it do to a bounce back up. Let me show you an example here where the market does that. So watch here, for example. The market reached overbought zone, so we know it's due for a bounce back. So the market was here at 1.22640, and the market then dropped down, and the RSI dropped with it. And as we can see, the price of the market actually dropped to 1.21591. That's the first way to actually use this oscillator. But the problem with this way is the market moves really quickly every day. So you might have a lot of, like, especially if you're using a 4 hour chart or a 1 hour chart, you might have a lot of oversold, overbought signals. So you can't count on this way very much. The better way to use this oscillator is by using to check if there's any divergences between the oscillator and the market price. What is a divergence? Let me explain what a divergence is. The divergence, so basically the RSI or this oscillator, for example, it's always moving with the market. Like if you guys see, like the price is dropping, the RSI is dropping, the price is dropping more, it's dropping more, the price is going up, the RSI is going up. So it usually goes with the market in sync. But when it doesn't sync up, that's created a divergence. For example, look here. If you're looking here, we got the first high and a higher high, the first low and a higher low. So if we mark it, it's going to be something like this. But if we look at the oscillator, we're noticing that we're getting the first high and a lower high second. So it's a divergence. The RSI is actually not moving in sync with the market. So that basically indicates a reversal is due. So the market was bullish, for example, here. And after this divergence happened, we noticed that the market actually dropped down and even more and even more. And that's basically how to use divergences. This is a very simple oscillator, to be honest. It's one of my favorite. I use it all the time. And that's basically everything you need to know about it. Thank you all for watching. I hope you learned something here today. And please like and share and comment on this video if you like the materials. And you all have a very good day.